Welcome to BWC News. I am Elizabeth. Warren Buffett once said, "Inflation is the investor's worst enemy." This indicates that inflation has become the biggest problem in preserving the value of personal assets, affecting almost everyone. Inflation refers to the depreciation of money in circulation in excess of the real needs of the economy and an overall and sustained increase in the price level. Internationally, 5 indicators: Consumer Price Index, Producer Price Index, Retail Price Index, Wholesale Price Index and Average Gross Domestic Product, are generally used to measure the degree of inflation. On Monday, May 22, the Federal Reserve released a survey on U.S. household economics and policymaking, showing that a growing number of Americans say they are struggling with their finances and that inflation has taken a toll on American households over the past year. The report, which surveyed the financial situation of a sample of more than 11,000 adults and their families across the U.S., shows that as of last October, about 73% of adult Americans felt they were doing at least okay financially, down 5 percentage points from the previous year and at the lowest level since 2016. Overall, the report shows that while workers continue to benefit from a strong labor market, rising prices are negatively impacting most households, and overall U.S. households are doing less well financially than last year. Nearly a quarter of respondents said that while their expenses have increased in 2022, their income has not. About 2/3 said they stopped using or reduced their use of a product due to higher prices, while 51% said they reduced their savings. About 28% reported that they did not receive some form of health care last year because they could not afford it. There are 2 main factors that contribute to inflation: demand and cost. On the demand side, overconsumption, overinvestment, and excessive money supply can all lead to higher prices. On the cost side, firms may also increase prices due to higher production costs or monopolies that raise selling prices to increase profits. The 2 factors of demand and cost will alternate, with rising demand leading to rising costs and vice versa. In addition, differences in the structure of the economy can also cause inflation. For example, quality sectors attract capital, leading to higher incomes for those working in those sectors, but wages do not decrease in sectors where capital leaves, and overall, the aggregate price level of industries and services rises. The international transfer of inflation is also an important factor in causing inflation in the country. In the inflation of world currencies such as the dollar, which is actually exported to the world, the open economy sectors are more directly and closely affected than the non-open economy sectors. There are benefits to moderate inflation, which can artificially promote economic prosperity. In inflation, prices generally rise faster than wages, so that the prices of products sold by firms rise rapidly, while the costs of firms, especially the wages of employees, rise slowly, and the profits that firms can make increase, thus stimulating them to expand production and promote economic development. In the inflation process, there is an alternating relationship between the inflation rate and unemployment. Generally speaking, when the inflation rate is high means the economy is booming and people's unemployment rate is low, while when the inflation rate is low, the income of enterprises falls and the growth rate of money wages is low. In the process of inflation, debtors will benefit while creditors' interests are lost. Since the effects of future inflation cannot be anticipated at the time of entering into debt, for debt relationships with fixed interest rates, the debtor's effective interest rate will be lower due to inflation. The government, as the largest debtor, is relieved of a certain debt burden through inflation and reduces the fiscal deficit. Firms are affected by inflation and will expand production to make more profit. However, if inflation is too fast, companies may expand production blindly, leading to higher raw material prices, causing unnecessary waste of resources and, most importantly, this may damage the environment. Overall, inflation will lead to a decrease in the purchasing power of money, people's real income will decrease, and if the various incomes of residents cannot keep up with the rate of inflation in time at this time, it will cause a decline in savings and capital accumulation in society as a whole, lower investment in production and business, and lead to a decrease in economic growth rate. At the same time, people will rush to buy assets with good value preservation ability, such as gold and real estate, because of too fast inflation. Last year, due to a strong labor market, the survey showed that 1/3 of adults said they received a raise or promotion, an increase of 3 percentage points from 2021. Of those who asked for a raise, 70% of respondents said they had received one. However, only 63% of adults surveyed said they had $400 in cash or its equivalent on hand to pay for a possible surprise, a lower percentage than the 68% the year before. Many will reportedly rely on credit cards or family members to cover possible surprises, while about 13% said they would not be able to pay for such an expense anyway. The percentage of Americans who say they are confident in their retirement preparations also declined, with 31% of non-retirees saying they are on track to save for retirement, down from 40% in 2021 and below the levels seen since 2018. This Fed report is another testament to the struggles of the U.S. population, especially the bottom half, under high inflationary pressure. According to a report published last December by Edelman Financial Engines, a U.S. consulting firm, 71% of employees believe wages are not keeping up with the soaring cost of living, and the number of people who feel financially secure has fallen to its lowest level in 5 years. In addition to the doubling of the cost of daily living pressure, the U.S. public in healthcare spending is more difficult to feel. According to a survey released by Gallup Consulting in January, nearly 40% of U.S. adults have experienced an inability to pay for medical expenses and difficulty accessing quality care, with most of them citing medical costs as a source of daily stress. Gallup said, according to the results of the survey, about 18 million U.S. adults feel extremely difficult to afford medical costs, highlighting the U.S. public dissatisfaction with the cost of healthcare services. High inflation for low-income people to hit more. Financial and economic intelligence provider Moody's Analytics estimates show that in September 2022, the average U.S. household will need to pay $445 more to buy the same goods and services as a year ago. High inflation has led to higher prices for essential goods in the U.S., and low-income families can't even raise their children. A survey by the U.S. mother and baby website, Baby Center, found that U.S. parents need to spend at least $16,000 on basic expenses in the first year of their babies' lives. However, many low-income families have a monthly income of only $500, the price of baby products. They are particularly hard hit. It's the end of this video. Thank you for watching. Please subscribe to the channel to support. See you next time.